Hello, everybody, and welcome to a new special edition of Merrill's Monday Market Madness. I am joined today with a special guest, a co-host, Lynda Yap, who is an agent on the Big Helper team at eXp Realty, and really excited. We're going to start bringing new agents onto the show on a regular basis and letting them share some of their market knowledge with you all as well. So, Lynda, thank you so much for being here with us today.
Thanks for having me. Good morning.
Yep. So if you have never seen our show before, I always like to start out by just looking at a number called the month's supply of inventory. And so basically it gives us a sort of an indication of how much supply is there compared to how much demand is there. You just take the number of active listings and divide it by the number of listings that have sold over the past 30 days. If no new homes were to come on the market, how long would it take at the current pace homes are selling for everything to be gone? Obviously, it's sort of an imaginary scenario. But so right now we have 17,904 active listings. And that's significant because back in March, when we hit our kind of low water mark on listings, there were about 4,000. So we are almost 4.5 times more listings today than there were just back in March. So inventory is obviously skyrocketing. The total number of pending listings is at 8,068, which is also significantly lower. Again, at the high water mark, we had more than 13,000 pending listings. Over the past 30 days, we've seen 5,778 listings close, which gives us a month supply of inventory of 3.10, which is the first time since we started this show several years ago that we've ever had a month supply inventory greater than in the threes. In fact, there was a while when we were as low as 0.5 month supply of inventory. So the MSI number has 6x'd from its lowest point, which basically, probably isn't coming as a huge surprise to people. The market has more than cooled off isn't even the right word for it anymore. It is, it's slowed down dramatically. And in the past, I had talked about how the month supply of inventory number, a balanced market would probably have around a 4-month supply of inventory. A buyer's market would have 5 or more months supply of inventory. We're only at a 3.1, which means, according to that metric, we should still be in a seller's market, but that's not actually the case. That's not really the numbers that we're seeing. And I think it's primarily because of how fast and how dramatically it has changed. The market has shifted so quickly that we are starting to see a drop in home values and average sales prices, and interest rates obviously being higher and affordability and all those concerns that the number being a 3.1, but we're basically in a buyer's market at this point. So I'm going to go ahead and turn it over to Lynda, and she's going to start diving into some of our numbers.
Thanks, Merrill. So in July, we saw a number of closings of 6,161 homes. The average price was $547,345. The average days on market were 33 days, so a little bit of an increase there. The sale price compared to the list price was 98.7%, and the total homes that either canceled or expired, their listing was 2,342.
Okay, awesome. Thanks, Lynda. So let me put some of those numbers into context for you. So again, she mentioned that in July, over the past 31 days, there were 6,161 closings. Well, in June, so just a month ago, right, there were 8,116 closings. So just in 1 month, the total number of closings dropped by 24%. Now, July is typically a little bit slower than June, but not that much slower. The average price in June of this year was $592,213. Lynda just mentioned that in July it was $547,000. So we actually saw the average sales price drop 7.6% in just 1 month. That is staggering. It's a faster change than anyone ever could have thought. Anyone ever thought could have happened. The days on market in June was 29 days. In July, it was 33. So we've seen the days on market is already ticking up. And the sales to list price ratio in June was 99.8%, meaning in June, the homes that were closing got almost full price. Well, the homes that are closing in July, 98.7%. So on average, homes are getting less than what the asking price is. And there were only 1,751 homes that canceled or expired in June versus 2,342 that canceled in July. So 600 additional homes canceled or expired in July as compared to June. Lynda's going to talk about how the July numbers for 2022 compare to the July numbers of 2021.
Yes. So in July 2021, we were in an insanely hot market. We saw 9,142 closings, which is year over year down 33%. We saw the average price at 498,169. So we're still seeing an increase year over year, close to 50,000. We saw the days on market were average of 27 days, and the sale price to list price ratio was 101.4. In July 2021, we saw 1,058 homes that either canceled or expired their listing.
Got it. Thank you. So yeah, we're seeing more than twice as many. What is that? More than twice as many homes are canceling and expiring this year as compared to last year. But I do want to highlight the average price again. So she mentioned it, but the average price in July of 2022 was $547,000. The average price of July of 2021 was $498,000. So the average price, yes, it dipped from June to July, but compared to July of last year, it's still up by about $50,000. Pretty substantial amount to be up. So no doubt the prices are kind of struggling right now, but still up quite a bit from last year. Last thing I want to touch on is mortgage rates. Unless you're kind of, well, if you're living under a rock, or maybe you just don't pay much attention to financial news, the Federal Reserve met last week and decided to raise the federal funds rate by 75 basis points, or in other words, 0.75%. And a lot of people have kind of been freaking out to me, and just what I'm kind of hearing and seeing on social media and all that stuff, that they think that means mortgage rates are rising 0.75%, and that's not actually the case. And it's a little confusing. And if you just think, oh my gosh, this is getting too complicated for me, then I get it. But I'm kind of a nerd, and I like kind of tracking some of this stuff, and I like to understand it as best that I can. I'm no financial markets genius, but I know a little bit. So the federal funds rate is the rate at which huge bank financial institutions can borrow money from the federal government. And it's short-term loans, not mortgage loans. Mortgage loans rates are set by mortgage-backed securities and basically the bond market. Well, the bond market changes in anticipation of news, just like the stock market does. And the anticipation had been that the Fed was going to raise rates either 0.75% or an entire percentage point. So when they raised it 0.75%, the markets actually reacted positively because it wasn't as dramatic as many thought it was going to be. So on Friday, we actually saw mortgage rates dip. And I actually just checked this morning. If you've watched any of my previous episodes, I often share a website, Freddie Mac posts about average rates. It's freddieMac.com/PMMS. But the problem with that site is they only update the rates on there once a week. And I had a wonderful client turn me on to another source that updates daily called on NerdWallet. And according to them, the average rate for a 30-year fixed conventional mortgage is 4.986%. That's the first time in a long time that we've seen it below 5%. And so I know that sounds contradictory to a lot of people. They're like, hold on, the Fed raised rates. But because the news was better than expected, many thought it was going to be 1%. When it only ended up being 0.75%, mortgage rates actually improved. So we've got a wonderful scenario right now for home buyers. It's not quite as beautiful for sellers. We can still help sellers, but if you're a buyer and you're like, you know what, I don't know if right now is a great time to buy because prices are dipping. This is the best time we've seen to buy in over 10 years for a buyer, and here's why. You can negotiate off of the list price. You didn't used to be able to do that. Prices are 8% lower than they were last month, so you're getting a way better deal. Rates are lower than they've been in a couple of months now, and in most cases, I mean, if you're going for like a home that's got tons of other interests, maybe not. But in most cases, we can actually get the seller to agree to give you concessions that we can use to cover your closing costs and or buy down your interest rate. So sometimes, let's just say we got $10,000 from the seller and maybe we're using 6,000 of that to cover closing costs. We can use the other 4,000 to buy down your mortgage rate. So if you're starting at a 5% and we just put an extra 4,000 on it, now you might be able to get down to, I mean, it depends on your loan amount, but maybe you can get close to a 4.5 or maybe you're at a 4.75, but that's not a bad rate at all. So this is the best time to buy that I have seen in years. So if you've sort of been on the fence, like, whoa, this is an excellent time for buyers to buy, and we would love to help you out. So hit us up. And get in touch with us. We'll be posting this on social media and emailing it to people. So feel free to respond or comment if you're interested. If you want to know more about the market, if you have any specific questions, hey, just last week I had a client, and I'm sorry, I'm going off on a tangent. This was totally unplanned. Last week, I had a client call me up and said, hey, I own this investment property and it's a townhome. And I heard that single family homes appreciate better than townhomes. So maybe I ought to sell it and buy a single family home instead. And I said, you know what? I've heard that too, but I don't know whether it's true. Let's run the numbers. And I ran the numbers over the past like 6 years. And we found that the townhomes and condos in his area had actually appreciated more than the single family homes. Not to mention that if he were to sell the house, he currently has a 3.1% mortgage. He'd have to sell that, get up that cheap money and finance something new at a much higher rate. And like after we looked at the numbers, we were like, no, that would be stupid. You shouldn't sell. And but the point is, I love doing stuff like that. It's what I live for. So if you're curious about a little aspect of the market like that, or you want to know what's happening in your neighborhood, or if you want to know what average prices are doing, or you want to know what the comps, you want to know what the value of your home is, you want to know what a buyer could give you for your home in this market, would love to have those types of conversations with you. So please hit us up. We appreciate you watching our show, and we will see you next time. Thanks.
Bye.